Well, folks, there are some absolutely incredible, unbelievable things going on in the market right now. Things that are going on that just, most investors, I don't even think are looking at right now, that are going on that I think are extremely important to pay attention to. Changes that are happening right beneath the surface that are right in front of everybody's face, but a lot of folks aren't looking at it right now. And these things are extremely important in terms of like the direction of the market, where we're going, where we're headed, and kind of giving you some telltale signs that certain things are about to transpire in the market that I don't think a lot of folks are even prepared for or kind of looking at right now. So we're going to get into all that in this video. It's going to be an action-packed video. Got a lot to show you guys in this video here today. By the way, check out FTX US. That will be the first link in the description down there. FTX US is the official crypto partner of the channel and me. It's the easiest way to buy crypto, 24/7 customer support, 85% lower fees than competitors. And also with every trade over $10, you get a free coin, and use referral code Holy Smokers when you set up your account. Okay. NASDAQ officially reached 30% down year to date here today. Okay. When I took this screenshot, it was almost 30%. But yeah, that's insane. Okay. 30% year to date, 5 months into the year. Who would have thought it? The Russell now is down well over 30% from the highs the Russell had reached. And, the fall in the market has been nothing short of extraordinary, like something you don't ever see. Like, this doesn't just like, oh yeah, every 3 years this happens, or every 5 years. No, you get corrections in the market. That's normal, right? Where NASDAQ will go down 10, 15%, something like that, right? You get bear markets from time to time where the NASDAQ's going to go down 20, 30, 40%, right? But you don't get a year to start out and through 5 months into the year, you're down 30% on the NASDAQ. That doesn't just happen. That you can't go back in time and be like, oh yeah, this year it happened. No, it didn't happen in the tech bubble. No, it didn't happen in 08. No, it didn't happen in 09. This is pretty insane on kind of what's going on in regards to that, right? But way more important, there's certain things going on in a day like today that are happening that are telling us the market is headed certain directions and we're in a certain part of the cycle of the stock market, okay? And a perfect telltale sign of this is Apple stock here today. And here's why. If you're looking at Apple here today, this stock is down. I've seen it down over 5% at one point today. Literally, Apple is down over 5%. This stock is also falling off a cliff. And this is the most insane part of this whole situation. Apple is coming off of an A+ earnings, okay? It was a great earnings they had. I mean, they beat on almost every metric possible. Their earnings were insane. And although they had this incredible earnings, right, the stock is still just down and down and down and down, which shows you there's no saving a stock in this sort of market. It doesn't matter how much profits you have. It doesn't matter how good your earnings were, even if they were the best of the best. In this market, you are getting slashed, and nothing else matters in this sort of market, right? And so this is a telltale sign that we can be entering really what's called the final phase of the drop, where this is the moment in the market, okay, where the ones that had been holding up well even end up getting basically collapsed on, okay? And that's why you see Apple now down 22+% in a pretty short amount of time, and much of that has come very recently because even that baby's falling now. The Goliath that is Apple, the unstoppable one, the most profitable company in the world, the most incredible company in the world. When you see that baby just getting hammered and hammered and hammered, you know you're finally starting to reach that final stage of the market drop where there's nowhere to hide. Because if you understand, and you've gone through history and you've seen market drops throughout time, by the end of a true, real, bear market, by the end of that thing, there was nowhere to hide. Everything got hit. And there were some stocks that held up better than others, but by the end of that thing, everything got hit. In the 07 through 09 crash, by the end of that, everything was destroyed. It didn't matter if you were a bank. It didn't matter if you sold toilet paper. It didn't matter if you sold cars. By the end of that thing, everything had been hammered, okay? In December of 2018, same exact situation, just to a lesser extent, because that fall wasn't nearly as vicious, okay? But that was the same exact situation where you looked at these stocks, and by the end of that thing, everything had been hit. Everything had been nailed, right? And here we are at this moment where even the one that they thought couldn't go down is now going down 22% now. Apple is down here, okay? Mr. Softy, Microsoft is approaching 25% down year to date now. Lost almost a quarter of its value now in the past, basically since the start of this year, so about 5 months. And this was another one of those stocks that it was just unstoppable. It's Microsoft after all. It's the profit machine. Low customer concentration, so many different businesses that are so incredible and profitable for them, right? And even this stock it's collapsing right in front of our eyes. And much of this has really just come, honestly, in the past month or two, right? And there's just kind of nowhere to go but down. Obviously, Amazon's been one of those stocks. I mean, Amazon was thought to be, you couldn't stop this stock, right? And year to date, the stock is down over 38%. 38% for Amazing's. I mean, it doesn't get better than Amazon. That's the thing. Like, it doesn't get better than this company, right? Nvidia is a whole other level, okay? There's a whole other level. This stock year to date is down about 48%, coming off of incredible earnings. Incredible earnings, okay? And think about this for a moment, because this is very, very important for Nvidia. It just dropped under a $400 billion market cap. The stock's down over 5% here today. And like I said, down almost lost half its value so far this year, right? It's not just that Nvidia is, a company that had been holding up pretty well until very recently. It's fallen off a cliff. And it's not just the fact that earnings were great and it's still going down. It's the fact that Nvidia is a business, right? A company that is seen as not just one that thrives now, but one that thrives over the next 5-10 years, right? Because of their chips and the incredible capabilities, right? And, what Jensen Huang has done at that company over time and everything they have going for them. Like, it's incredible, right? But right now in this market, what this symbolizes when it comes to Nvidia is a moment in time where folks don't care about the short term or the long term. And that's when you're in the most vicious market. When Wall Street says, we don't care that you just reported an incredible number, and we don't care that your long-term future is great at your company, Nvidia, you're going down regardless. There's no winning. There's no winning right now. No winning in this sort of market, right? When those are, but what I will say is, once again, if you want to talk about, having a bottoming out cycle and kind of being toward that end phase of a crash, you have to see these stocks fall. You can't get a real bottom on the market until everything has been hit. We need everything to be hit in this game to even think about reaching a bottom on this market, okay? You look at, this is where things get really weird, okay? Look at Shopify. So this stock's been hammered. It's down like 75% year to date, right? Shopify's up 6% today. So it's like, wait, Apple's been down as much as 5% today. Microsoft's been down as much as 4.5% today. All these, great established companies that are super profitable, right, that had been holding up well are all falling to pieces. And Shopify, the stock that's down 75%, is up 6% here today, okay? Now, there's a certain thing that goes on at the end of a cycle, right? And you can't get too excited about this move in Shopify because it could just be a one-day fake out, okay? That's something you got to understand. But what we've consistently seen throughout time is when you're at that final stage of a bear market or market collapse, whatever you want to call it, okay? When you're kind of at that final stage, right, you can see actually companies that had been holding up very well getting devastated, while simultaneously the stocks that had led you to that place that were getting devastated start outperforming those stocks that are seen as the safety business models. And it's like, wait, how's that even happening? And the reason being is the ones that get hit first, always going into a crash, this is how it happens, okay? The most speculative stocks are the ones that get hit the most, right? The unprofitable companies, the ones that have very questionable business models. Then the companies that are seen as they have great revenue opportunities, but we don't know when they're going to get profitable. Those are the next ones to get hit. Then it's all small caps get hit. Then it's all mid caps get hit, right? And then the last stage is some of the biggest of the big techs, and then like the safety business models like the Procter & Gamble's, Johnson & Johnson's, oil and gas companies, those sorts of stocks, even those get hit by the end of the whole thing. And it's like, geez, everything was hit. But when you're kind of in that bottoming out stage where those stocks are getting devastated, you can actually start to see some of the more speculative plays start to outperform those, and sometimes even have green days on very red days. And it's like, what? What? Like shouldn't, if anything, if Apple's down 5%, conventional wisdom would tell you that Shopify would be down 12 or 18% today. Bottom line, like if that's all you knew nothing else, and you say Apple, Microsoft are down 4 or 5% today. What's Shopify down? Anybody that knows anything about the market would be like, Shopify is probably down 10, 15%, somewhere in there today, because if it's a great day in the market, Shopify is usually going to outperform. This is what has happened over the past, many years in the market, right? And if it's a horrible day, that stock's going to underperform. But when you get that switch, that's the moment where it's like, wow, what is going on? Is this just a one-day fake out, or is there something more to the story here, right? And so if you can consistently start getting some of these sorts of days where a company like Shopify starts to outperform some of the beast, right? You're like, that's when you start to get that telltale sign. This isn't just a Shopify story. Look at Netflix here today. Netflix is up 2.5%. And who knows where that will trade at by the end of the market, right? 2.5%. For Netflix, a stock that's down 71, 72% year to date, that's been absolutely devastated. So it's like, wait, what? Microsoft, Apple are down, Netflix and Shopify are up? What in the flipping flapjacking is going on in this market, right? This is crazy. You want to talk about something crazy? Look at Beyond Meat, okay? So first off, this stock's going to finish down today, but this stock has come back 19% during the trading day from around where it opened to where it's trading at now. And at one point, the stock actually turned positive on the day, which is crazy. That's one of those things that will just absolutely blow your mind. Like, what? How did this stock come back so much? Now, in a stock like Beyond Meat, that could be so many various things. That could be a short covering, where shorts were covering, and buying up shares left and right. Like who knows what happened there? But I will tell you, that is a weird situation. By the way, numbers are not good. I don't know what other way to put it. A lot of companies have reported what I feel is good numbers, or at least okay numbers. I would put Beyond not into the okay. I was very disappointed in those numbers. Their plant-based jerky product they come out with recently is very good, but their core traditional business model is still in trouble, in my opinion. They need that McDonald's deal. Okay, I'll just say that about Beyond. And when I say that McDonald's deal, I'm not talking about the one they have now. I'm talking about one that's nationwide. They need that to really get rolling for, in my opinion, this stock to have kind of a real bull cycle, right? And obviously, if the market comes back big, it will go into its own bull cycle. But if we're talking about, let's call it a massive bull cycle, they really got to get that McDonald's deal nationwide. If they can do that, the stock has big upside. But until that, they're in a hard place, no doubt, in the short term, right? Look at this even a step further, right? Look at all these stocks. Like these are stocks that have been absolutely devastated, right? And these are stocks I personally own, right? Netflix is one I barely just bought very, very recently. But Oatly's a stock I own. This stock's up over 5% today. Foot Locker's up. All these stocks are stocks that had been getting devastated. Nordstrom's a stock I own in my dividend account along with Foot Locker. That one's up 3%. Netflix, like I said, I just started buying that one in the past week or so. And that one's having a good day today. Honest had been getting devastated. That one's green today. And the Chef somehow trying to eke out a green day today. And those stocks have all been devastated recently, right? And so you're seeing green in those sorts of stocks while you're seeing red and massively red in some of what is seen as the companies that have been holding up the best, right? The stock prices, I shouldn't say the companies that have been holding up the best, right? These stock prices that have been holding up the best. Because a lot of these companies have great business models and haven't actually reported disaster numbers like their stock prices say. But the market is driven off of emotions a lot of times in the short term and not really fundamentals. All these companies have not reported disaster quarters, right? Netflix maybe a little bit, right? But also Netflix numbers were hurt from the whole Russia situation. So that's something to kind of keep in mind there, right? We're losing Tesla. We're losing Tesla, man. This stock now is down 40% year to date. 40% year to date. And remember, if you were to say who's had the most impressive earnings this entire earnings season, Tesla, for me, Tesla might be the company that's had the most impressive earnings the entire earnings season. If they're not number one, then I would definitely put them top three. And I've looked at hundreds of quarterly reports so far this earnings season. It's ridiculous. I haven't seen a company, honestly, off the top of my head, that reported a more impressive quarterly report than Tesla did. The fundamentals don't matter in this sort of market. We just talked about that, right? The fact that Tesla just reported an A+ quarter Wall Street doesn't care about that. The fact that Tesla is a massive growth beast with, EVs just continue to take off over the next decade in Model 3 and Model Y and Cybertruck and the robotaxi network, all that stuff doesn't matter right now. It doesn't matter. If the market wants to send Tesla down, to 500, it's going to do it. That's up for the market to decide that. And it has nothing to do with Tesla's fundamentals or the company being broken or something like that. Like if that's where the market wants to take it, that's where the market's going to take it. And if that's where big money wants to take it, that's where big money wants to take it at the end of the day. And so, it's very important to understand a lot of these moves down, these stocks has nothing really to do with the fundamentals of companies anymore at this time. When you're in if the market was up 30% through the first 5 months of the year, that would be dangerous. That wouldn't be driven off of fundamentals. That'd be driven off of FOMO, okay? And when the market's down 30% through 5 months, when it comes to NASDAQ, it's not driven off of fundamentals anymore at that time. It's driven off of fear, okay? Then it's very important to decipher between the kind of BS and the truth behind that. And what newer investors sometimes make it, and people that think they, might know what they're talking about in the market that haven't really studied the history of the market, is at first they see the more speculative plays or those growth plays falling, and they think it's justified. And then all of a sudden, next thing you know, the indexes start falling majorly. And then all of a sudden, next thing you know, everything falls majorly. And then they are like, okay. It's one of those sort of situations. And it's just how it plays out. And if you just study history, you understand these patterns and these cycles that we go through. And it's not just like this stock is a garbage stock or something like that. It's not the way it works. It's the cycles, okay? Dutch Bros. Wow. This stock got hammered today, 28% down for Dutch on a day like today. There's just no liquidity there, right? I mean, this stock is down 54% in the past 1 month. That's just, devastating. By the way, guess where I went? I had a C. I saw the stock down that much. And I said, let me go to Dutch Bros. I went to Dutch Bros this morning. I got a drink for myself and my wife, and, the place was busy. And the guy at the counter who gave me my drink, he said, it was, I think his last day or one of his last days. Somehow he remembered me. He's like, oh man, how many of these Teslas do you have? And I was like, you remember me? Because I went there a few weeks ago, and but I was in the Plaid, and he said to me, it was one of his last days working there, and he is basically going to, he's getting a real job in finance, he told me. And I guess he's about to graduate college or whatever, right? Which is that time of year. And so, I was real happy for him. And then I said, you must know me, right? I'm kind of like a big deal in the finance community, in the stock market community, and you know what he said? He said, yeah. Oh, you know what? I do know you. Yeah. You're the guy that's lost money every month for the past 7 months, right? And I drove away. No, just kidding. We didn't go there, okay? Didn't go there. I didn't give my channel a shout out, man. I was too ashamed. No. Imagine that happens. Oh, man. Whew, that would be the burn of the century right there, man, on the spot, okay? Now, what is weird about the image I'm showing you right now? I hope everybody looking at this right now can identify there's something way out of the ordinary with this image I'm showing you right in front of your eyes. And no, it's not the Federal Reserve Chair, Jay Powell, is confirmed by the Senate for a second term, okay? It is not that. There's something extremely strange about this image, okay? What is it? Well, first thing that's strange about this, the Russell, the best index for the day, okay, that is not a trend we have seen for the past 7 months. For the past 7 months, the trend we have seen is the Russell does usually the worst, okay? And if it's not the Russell that does the worst, guess what it is? It's the NASDAQ. But we have a complete inverse today. This is very strange, okay? Dow, the worst, that's been the one that's holding up the best. S&P 500 second worst, that's the one that's been holding up second best. The NASDAQ third worst, and then the Russell least bad of the bunch? What? Very strange stuff starting to go on the market. And when you get days like this, it's very important not to say, like, this is a trend, this is going to happen, this is happening. It's just very important to recognize these things and see if a trend starts to build. Because I can tell you, if the Russell keeps outperforming, that is a great sign that the market is in the bottoming phase. Let's just put it that way. And you're within a very short amount of time of starting to essentially flip that market, okay? And, a couple things the market's obviously waiting for, right? The market's waiting to see if the rate of increase in inflation continues to go down. We had 1 month. Okay, good. Market wants to see a second and third month. That would be massive, because then at that time, the Fed can maybe lay back a little bit and not be as aggressive, right? And if we can all of a sudden see a few months from now, inflation go under 5%, whew, yeah, you want to talk about something that would be bullish for the market. Right now, we are in a massive fear market. Cole sent me this earlier today. I can't remember where the bottom was for the Rona crash. I don't know if it was 8 or if it was 3 or if it was 10 or whatever. But yeah, I mean, a 6 is ridiculous. Like, might as well just be at a 0 when it comes to how fearful this market is right now. And it's incredible. It's incredible. But when you say the NASDAQ's down 30% year to date, I can understand. We're in extreme fear. Yeah, that doesn't just happen. That's a freak situation we're going through right now. What did I do here today? You know me. I bought stocks. NASDAQ's down 30% year to date. I'm going to buy stocks. I bought 40 Facebook shares. I bought 1,000 Honest shares here today. I bought 50 PayPal shares. I bought 10,000 Avant brand shares. I bought 2 Amazon shares. I bought 250 Corsair shares. I bought 1,000 Tattooed Chef shares, okay? In terms of these companies, FB is obviously a profit machine. Honest will be a profit machine. They should start having some profitable quarters in 2023. PayPal is a profit machine. Avant Brands is looking like it's going to become a profit machine very, very shortly. That one's the management team at Norton and those guys. They've been doing their job. That's all I'll say about that. Numbers have been incredible. Amazon's a profit machine. Corsair's a profit machine. And the Chef is going to start hitting profitable quarters in the back half of 2023, management has said. And I'm very, very confident they will be able to. And their margin story is just going to get better and better and better. So I like what I'm buying, and I'm going to continue to buy those. And by the way, these positions, I'm going to continue to build these out. So even if the market flips, is very important to understand. Even if this market flips and we start going up, those are positions I'm going to keep building. And there's a few other stocks out there. I'm going to keep building those positions, even if we start going up and this market starts flipping, let's say next month or something like that. These stocks are so low that I will continue to build out the positions regardless if they go down more, up more. It doesn't matter. When we're this low on some of these stocks, they're at prices that I never even thought was possible. So I'm just going to continue to pick up shares and add my ownership bigger and bigger and bigger over time. Okay. Hope you guys enjoyed this video. As always, it was a little beast video. If you want to check out FTX US, check out first link in the description down there. Easiest way to buy and sell crypto. With every trade you do at $10, you get a free coin. That's pretty dang awesome. And like I said, once you sign up for your account, use the referral code Holy Smokas. Much love and have a great day.